Hello traders, welcome to SammybrainFx. So in today's video we are going to be looking at how to spot at a sniper entry trading synthetic indices. It's not just only synthetic indices. This can also work in crypto. It can also work in currency pairs as well, but you're going to be focusing on using this on synthetic indices by Deriv, using the Deriv platform. Alright, so without further ado, let's dive in. If you're yet to subscribe to our channel, please do well to subscribe and then like our videos as well to continue to keep receiving updates from us. Alright, let's dive in. So we're looking at first of all our trading model. Now our trading model, we have the buy buyers and then the sell buyers. So let's start with the buy buyers, which is first of all we're looking at our demand zone. Okay, now before we look at buying in any trade, okay, we're first of all going to make sure that the market is in an uptrend. Okay, it's in an uptrend. So if the market is in an uptrend, we'll look out for a buy opportunity. That's where we'll be seeing our demand zone. Okay, so if the market is in a downtrend, okay, that's when we're going to be looking at for a sell opportunity. In that case, we'll be having our supply zone. Okay, like for example, if we are having a bullish market, a market that is making a series of lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay, so in this kind of market, we can spot out a bullish demand zone. Okay, looking at buying. Okay, yeah, this is for the bullish market. And then we also have for our bearish markets. For bearish market, if the market is making a series of lower high, lower low, lower high and lower low, meaning it's in a downtrend. So in this kind of market condition, we are going to be looking at for a sell opportunity. As we will have our supply zone. Okay, so for our trading model, we have the buy model and the sell model, which of course for the buy model we have our demand zone. All right, so what are we going to look at for first? First of all, we are going to be looking at for a break of structure. Okay, after a break of structure, we'll wait for price to tap into our zone, the zone that caused the break of structure. Okay, after price tap into that zone that caused the break of structure, we are going to be market structure is fractal, meaning what happened in the higher time frame is going to happen in the lower time frame. So once price tap into our zone, okay, we are also going to wait for the same thing it did here, this break of structure and a retest. We are going to look at for that same thing in the lower time frame, which is wait for a break of structure, a retest, works for a break of structure. Rather, this is the break of structure, this is the break of structure, wait for this retest and then we'll buy. So now this is where it's been explained. Okay, so after we waited for price to tap into our zone, the next thing we'll go for the lower time frame. We'll go for a lower time frame, we'll zoom in. It could be a 15-minute time frame. The lower time frame could be the 15 minutes, 10 minutes, 5 minutes, 3 minutes or thereabout. So we'll look out for something like this. We'll look out for a break of structure, a retest, and then we'll enter. Okay, so that's what we're looking at for. So the same thing applies to the supply zone. Okay, look for a break of structure, price tap into our zone, and then we'll see this pattern. We'll see this pattern in the lower time frame, which is a break of structure and a retest. Then we'll sell. So this is how it's been explained. Okay, the entry model, this is how what will happen in the lower time frame being explained here. So what will happen in the lower time frame that we're looking at for our entry model, this is what is being explained here. All right, so without further ado, let's dive in. Let's move to our main chart. All right, so now this is a trade we took earlier. Actually, as a matter of fact, this trade is currently running. This is the trade, it's running currently. Okay, the trade is currently running. So yeah, this is how we spotted out that entry. So first of all, let's start from the daily time frame. So in a daily time frame, we see that the market was in an uptrend. Okay, there was making a series of lower high, lower high, lower low, lower high, lower low. So the market is an uptrend. So what did we see here? We saw a break of structure to the upside. We saw a break of structure. So this was break of structure to the upside. Waited for a break of structure. After waiting for a break, after the break of structure, now this is the zone that caused the break of structure. So we were waiting for price to come into the zone, and then we saw a fair value gap. Very, very important. One of the things that will make your zone to be valid is that there's going to be a fair value gap. Whenever you see a fair value gap, meaning price was not traded efficiently, it means that in the future we are expecting price to come in and fill that void before it goes further. Okay, now so this is our daily time frame. We saw this break of structure, so we were anticipating price to come into this zone, okay, which it actually didn't come to this zone. So why didn't that happen? We'll go to a lower time frame. We'll go to our 8 hours time frame. We'll see that price actually came in. We saw that price actually traded efficiently. Yeah, there was an efficient trade. There was no imbalance in the 8 hours time frame. So there was no imbalance here. So price traded efficiently. Okay, and then of course there's a break of structure here. There's a break of structure. We have a break of structure here to the upside, and then after we have this break of structure, price went on, and then now there's also another break of structure here. So we also have another break of structure here, and this is the zone that caused the break of structure. This zone caused the break of structure. So we'll zoom down to a lower time frame. That's the 4 hour time frame. Now coming down to a 4 hour time frame, we saw this zone. Okay, this is the zone. Now seeing this zone, we saw that there was an imbalance here. Okay, there was a break of structure to the upside, and there was an imbalance here, meaning price in the future is going to trade to fill this void, tap into our zone, and then it will have to go up. So now let me take this out because this is the 4 hours. So but we can further refine that zone. So if I go to a lower time frame, so this is a 1 hour, 2 hours time frame. Coming down to our 1 hour time frame, we see that we are able to refine this straight down to 1 hour time frame. So this is our zone. So price, so what do we see? We saw our model, a break of structure. After we saw the break of structure, now this one is an inducement. Okay, this is a trap. So for those of us that would have wanted to buy from here, this is a trap. Okay, this is a trap. Yeah, that's an inducement, liquidity. So this is a trap. So price broke structure, and this is the zone that caused the break of structure. So waited for price to come in, tap into that zone. So after price tap into our zone, the next thing we do is we'll go to our lower time frame. Okay, we'll go to our lower time frame. We'll go to our lower time frame. That's to look at for our entry model. Okay, that's where we are looking at placing our trade. So now this is our 1 hour time frame. So we'll go to the lower time frame. Let's say the 15. It could be the 15, the 10, or the 5 minutes to look at for our entry. Okay, so now coming to our 15 minutes, let's see if we would have seen an entry. So now coming down to the 15 minutes, what we saw here is perfect. We saw the same pattern repeat itself. We saw that there is a break of structure here. Price took out this size. There was a break of structure. This is the break of structure. This is the zone that caused the break of structure. So now this is where we would have placed our entry. It could be our buy limits, and of course the stop loss should be below this zone. So and then so we'll see that price broke structure. After the break of structure, price retraced to that zone, and then it went higher. So this is actually how we spotted our trade. I'm currently in this trade. The trade is still running, so I've actually not exited the trade yet. Okay, because this is actually my target, but I actually have taken some partials around here. Okay, so this is actually where we are targeting. Price can see retrace through. at this place, but so this is actually where we are target, but we have taken partials here, and then we are still waiting for price to come down to this order zone. So that's how we spotted this sniper entry in this particular instrument. That's a volatility 91x index. Okay, so let's look at something else. Okay, so this is another trade we took. Okay, this is the trade we took. So how did we get our entry? We come to our daily time frame. Let's start from the daily time frame, so we'll have a full picture of what's happening. So we'll see that the market has been in an uptrend. Okay, it's an uptrend, making a series of higher high and higher low, higher high, higher low. So market is in an uptrend, so there was nothing clear, very clear here. If we will come down for our 8 hours time frame, so in our 8 hours time frame we saw that there was a break of structure here. So that there was a break of structure. Price actually broke structure here. It was a previous high, so price broke structure. There was a break of structure here, and this is the zone that caused the break of structure. Okay, this is not very clear here, so let's go to our 4 hours time frame. So 4 hours time frame, we saw clearly that there, of course, there was a break of structure. So this zone caused the break of structure. Is a break of structure. This zone caused the break of structure. So we have this particular zone here, this zone that caused the break of structure. This is a 4 hours time frame. So meaning after this break of structure, we are waiting for price to tap into this zone in the future and then go up. Now also after that break of structure, we saw that there was a void here. There was liquidity. There was liquidity. I mean, sorry, not liquidity. There was an imbalance here. Imbalance here. So price did not trade efficiently. Okay, so this is one of the confluences we look at for after a break of structure. Okay, we also look at for imbalance. If there's an imbalance before that zone, so it actually means that price is going to trade efficiently and fill up that void, tap into our zone and go up in the future. So that's exactly what we saw. So price came in after the break of structure, price came in, tap into our zone. This is our order block, our demand zone. So price tap into this our order block, this our zone. After price tap into our zone, let's see if we can refine this this zone further. Okay, this is 4 hours. We can go down to 2 hours, 1 hour to see if we can refine it further. Now the essence of refinement is so that we reduce our risk. Okay, reduce our risk. So coming down to our 2 hours time frame, we still have this zone here, we still have that zone here, so there was nothing to refine further. So coming down to our 1 hour time frame, so this is our 1 hour time frame. Was there anything to refine? There was nothing to refine further again. So that zone is the zone we are looking at for. So that's the zone. So what did we do? So price after the break of structure, so price went and tap into our zone. So the moment price tap into our zone, we'll look at for our entry criteria. Okay, so we'll go to a lower time frame. It could be the 15, the 10, the 5 minutes or 3 minutes thereabout. So let's go to our 15 minutes time frame. Let's go to our 15 minute time frame. So for our 15 minute time frame, did we see, was there any entry here? It was actually nothing clear here for us to have taken this trade in 15 minutes. So let's go to our 10 minutes time frame. Let's go to our 10 minute time frame. So coming down to our 10 minutes time frame, what did we see? Our 10 minute time frame is not very clear as well. So coming down to our 5 minute time frame, a 5 minute time frame. Okay, so yeah, coming down to a 5 minute time frame. So what did we see? Was there anything clear here? Was there anything clear here? Yeah, it was perfect. So what did we see? We saw here that price tap in. Okay, of course it took out this previous low. So price tap into our zone, and then where did we see a break of structure? Where did we see a break of structure? This is a break of structure. There was a break of structure. There's a break of structure. Yeah, we saw a break of structure. We saw a break of structure. So this low took out this high. So this is the zone that caused the break of structure. This is actually that other block that caused that break of structure right here. Okay, so that's where we put our buy limits. As you can see, after the break of structure, price came in and tapped into that zone. Off it went. So where would have been our exits? This is where we would have targeted to exit the trade. Okay, so this was that previous high. So our target is here. So price came in, tapped into our zone, went, did all this, and then of course we got out in profit. So that's how to spot a sniper entry in synthetic indices. Like I said, it's not just synthetic indices. It can work in currency pair, it can also work in crypto and every other tradable assets. So yeah, that's that for that, guys. So please do well to subscribe and like our video if you're yet to do that, and then also take your time to practice this and back test this. You see it play out most times in the market. More often than not, it will play out. Though there are times it fails, but more often than not, it will play out. So practice. So till we'll see you in our next video. Bye for